Hello, everybody. My name is Thor Young. I'm a moderator of Bear Bull Traders, and I would like to do a recap for you all today. Sorry I haven't been doing as many recaps as of lately. I've been super busy with a bunch of different little projects that have been going on. Also have some family vacation stuff I'm sprinkling in here, so just been a little bit of busy through the summer season. So today is the day, bringing you some new stuff. Nothing too fancy today. Thought I would just bring you a little bit of a recap. As you can hear, we got Andrew back, which is helping me out a lot. I'll hear him in the background.
Open range breakdown is more like a momentum trade, so you expect it to move fast.
So it's nice. We got Andrew back in the chat. And I wanted to go through my trades with you here. I got two really good trades today. I'm very, very excited about both of them. One of them is on Carnival Cruise Lines, which I'm about ready for a partial now. So let's get over to the trades. Before I do that, though, if you could take a second, please like the video, subscribe to the channel. Don't not ask for a lot here, but that really helps us focus here more and bring more content. The more interaction like that we can get. So anything like that would really help. So anyway, on to the trade. So right now I'm in CCL right now, actually. As you can see, CCL had a pretty big, started off with a squeeze in the beginning, and that rallied up to around R3. Now, for those of you who follow the pivot point, oh, there we go. We got the moving average. Hold on. Bow. All right, cool. Partial. For those of you who follow the Camarilla strategies, and what I'm talking about, Camarillas, is what happens here is if you look down at my 5-minute chart, notice where we're opening, right? We're opening kind of in the central range. So in order for me to take a trade, I need an extreme, right? I need it to either get above value, I need it to get below or away from value, but I want to let it get somewhere else, and then I'm going to play that return. So you can see that CCL here, and I use R3 for shorting. CCL had a nice rally here, but notice as we started to push up here, we had low volume on the push. Just showed a little lack of enthusiasm on behalf of the bulls. And then as we started to push up into this area, I started to notice little things like this 100 lot here on the level 2 starting to build below. Seeing larger orders to the downside on the level 2 is a fairly decent indicator that the bears are in charge of the price action right now and their profit orders are being put below. Generically, when the bulls are more in charge, you'll start to see those larger orders appearing on the top side. Actually, if you saw there as the price popped up, we had a little bit of a flash of some larger orders there. That might be a signal that the bulls are starting to try and get in and squeeze this thing or rally it. Also, notice the SPY actually just bounced off of VWAP as well and made a new high. So I'm going to leave my order on here. I've already got the majority of my shares out. I'm already down to about 15%. I think we could trend all the way down at least to S3 today, which would be below 2150. So I don't want to cut this position just because we're having a 1-minute squeeze. So in the meantime, let me pop over and show you my trade I took on IWM. Oh, excellent. IWM had a little bit of movement this morning in the pre-market and been rallying. And much like I said that I use my S3 for reversals or shorts, I use R4 for breakouts. So when you're getting near R4 in these Camarilla points, just to throw out a little concept for you, I want you to think about a rubber band. See, the Camarilla points, they really kind of represent the price, the ATR, the true range, or the average trading range based, yesterday's high, yesterday's low, and some other calculated math in there. But basically it boils down to a rubber band. And more or less anything between the central range and R4 or central range and F4 is about as taut as that rubber band wants to be. And once you get above R4, the rubber band actually snaps and it goes away from value. So we like to use R4 as breakouts because normally that's an indication that we're actually breaking out and doing something on the daily level. So you can see here at R4, we pushed against it a couple of times at the open. Right at the beginning, big volume sell-off right down to the 20 moving average. Bounced the 20 moving average, came straight up to the 9 moving average. I went ahead and did a la Brian Pezim, a little 920 action on this one. I went ahead and went long at the 9 using the 20, or the loss of my candle as the stop. Got a beautiful pop up here and got some partials. And then took some profit off there. Came back to the 9 moving average here. I was hoping it was maybe going to trend a little bit better, so I tried an add at the new 1-minute high since we did a low volume pullback. but alas, it just wasn't quite time. We ended up falling down well below my entry price. So it would have taken a stop out on that one anyway. I was free rolling in maybe off of 5% of my remaining position, so I did not have a lot going on there. So, but as you can see here, 2 pivot strategies off the Camarilla pivots. One's the R4 breakout. The other one is the R3 reversal for a traverse back down. Really, really great strategies. If you want to learn more about those, I've got a couple of them on the YouTube videos. And if you're a member of Bear Bull Traders, I have a webinar series on these. If you're not a member at Bear Bull Traders, I'm just saying it might be worth getting over and checking things out for a little while to check out that series. So I hope everybody has a great trading day today. I will have more YouTube videos coming for everybody now that the boss is back in town. And he's going to be more active in the open, so that frees me up a little bit more to get back into these YouTube videos. So I hope you all have a great day, and as always, y'all, keep it green. Thanks.